Welcome back to AI Research. Today, we are leveling up from the standard business plan and diving into the big leagues. How to write a prospectus for an IPO. A prospectus is essentially a business plan on steroids. While a standard plan is for internal strategy or early-stage pitching, a prospectus is a formal legal disclosure used to sell shares to the public. It's the bridge between being a private company and a public powerhouse. Here is the standard structure of a prospectus, broken down into plain English. Phase 1. The pitch and the price. The opening sections set the stage for the entire offering. 1. Front cover and summary. This is the offer at a glance. The offering. How many shares are being sold and at what price, or price range. The ticker. Which exchange are you hitting, e.g., NYSE, NASDAQ, and what is your symbol? The hook. A 5 to 10 page summary of your mission, your core products, and why this investment is an exciting opportunity. 2. Risk factors, the caution section. This is often the longest section because lawyers use it to protect the company from future lawsuits. You must disclose every possible danger. Internal risks. We haven't turned a profit yet, or our success depends entirely on our CEO. External risks. Changes in government regulations or a slowing global economy. Competition. Acknowledging that giant rivals may try to disrupt your growth. Phase 2. The money trail. Investors want to know where their cash is going and what they get in return. 3. Use of proceeds. What exactly will you do with the IPO money? Debt. Paying off old loans. Growth. Opening new global offices or hiring 500 new engineers. Acquisitions. Buying up smaller competitors to gain market share. R&D. Developing the next big thing. 4. Dividend policy. Will investors get a paycheck? You must state whether the company plans to pay dividends, cash rewards to shareholders, or if you will keep the cash to reinvest in growth. Phase 3. The narrative and the engine. This is where management explains the how and why behind the company's performance. 5. Management's discussion and analysis, MD&A. This is the story behind the numbers. Management explains why revenue went up or down, discusses current market trends, and explains their liquidity, how much cash is on hand to pay the bills. 6. Business description. A deep dive into the engine room of the company. Products, services. A detailed breakdown of how you generate revenue. Intellectual property. List your patents and trademarks. Market opportunity. Data on how many billions are spent in your industry. Phase 4. Transparency and financials. Public companies require total transparency regarding who is in charge and what the books look like. 7. Management and compensation. Biographies. The track record of the CEO, CFO, and board directors. Pay. Transparent disclosure of salaries, bonuses, and stock options for top executives. Conflicts of interest. Does the CEO own the building the company rents? You have to disclose it. 8. Principal stockholders. A table showing who owns more than 5% of the company, founders, VC firms, etc. This tells new investors how much control the founders will retain after the IPO. 9. Financial statements. The raw, audited data. This includes balance sheets, income statements, and cash flow statements, usually covering the last 3 years of operation. The plain English checklist. If you are drafting a prospectus, keep these 3 rules in mind to ensure clarity. Avoid legalese. Don't use aforementioned when above works just fine. Use active voice. Say, we sell software, not software is sold by the company. Use visuals. Use tables for financial data and charts for market growth to make the document readable. Alright, this is AI Research. If you find any value in this, subscribe for more. See you in the next video.